Everyone's been waiting for a noticeable spike of XRP during the Swell conference. Why are we really all excited about a FOMO spike in price? Will this give us some sort of an acknowledgement that we've made the right decision in investing in XRP? I mean, I'm exactly contrary to that. I'm not investing for the speculative FOMO bumps in price, but I am in this for the long-term viability of a revolutionary monetary product that will change how money is transacted around the world. XRP will see its day and will start increasing when full utility is realized through global mainstream adoption. In order for a complete realized global mainstream adoption of RippleNet to occur, we'll need to see an increase in participation from the developed as well as the developing nations, from cross-border payments and remittance payments to everyday use for payments, web monetization, and transfer of liquidity for financial services. Getting there is 100% underway. We see that, but we need to look a little bit deeper at how remittance payments in the developing nations is really a stepping stone to global mainstream adoption, moving the unbanked and the developing nations into the global economy expeditiously via access to liquidity and the availability of financial services. Hi, this is Jeff with the HODL Report. Join me today as we explore global mainstream acceptance of RippleNet and XRapid. I'm letting you know in advance that there's quite a bit of information that I wanted to cover on today's video, and really this is going to run a little bit longer than anticipated, but bear with me throughout the video. It's a lot of good information. If you like today's video, please remember to give a thumbs up and subscribe to the channel, leave some comments, and if you haven't started protecting your digital assets yet with the Ledger Nano S, I'm going to pin a link to the comment section below. Now let's get into today's topic. So we know that $5 trillion per day is transacted through the SWIFT protocol for cross-border payments, with more of the world participating in the global economy, with countries developing at a more rapid rate to become active participants in trade. What can this daily number actually be? Do you think it can double? Can it triple? With more access to banking and financial services, how fast can the economy grow in these developing nations to join the world economy? And what will the impact on trade and cross-border payments be when the developing nations do begin joining at a more rapid rate expanded? I truly believe that the volume of remittance payments will be seen as a small and insignificant number in terms of the potential growth in cross-border payments and global banking transactions in general, as the developing nations begin to see a rapid acceleration of economic growth. The question really is, how are they going to get there when a large percentage are still in poverty and many are unbanked? Now, the total remittances in 2017 was around $460 billion, according to the World Bank. Actually, an article posted in April of 2018 put it at $466 billion. A high percentage of money transferred was directed from migrant workers moving money from the host country that they were working into their home countries, which were typically low to mid-income developing nations. To move this money, the average cost of sending remittance payments ranged somewhere between 7 to 9%, really depending on the region that it was sent from and the region that it was received in. One of the issues that the World Bank identifies is the difficulty in attempting to decrease those costs. Here's a quote from a World Bank report. Major barriers to reducing remittance costs are de-risking by banks and exclusive partnerships between national post office systems and money transfer operators. And this should be underlined here, the exclusive partnerships. These factors constrain the introduction of more efficient technologies such as internet and smartphone apps and the use of cryptocurrency and blockchain in remittance services. The author of this report really mentions that it's difficult to reduce remittance costs due to the exclusive partnerships. The report fails to mention that the difficulties of exclusive partnerships is mostly an issue in one region, and that's in Africa. We see ripples working in Latin America and banks in Latin America, Mexico, Asia, and the Middle East. Outreach to Africa is most likely on the horizon for Ripple, but there are still many hurdles to overcome, and Africa really is a case in of itself. An article that appeared in The Guardian, this is in August of 2014, titled "Global Remittance Industry Choking Billions Out of the Developing World," had really an amazing statement. And consider this was about 4 years ago, and this has to do with Africa. There are 5 quarters country-to-country transfer. This is just a snippet quote, with an average fee higher than 20%, all of them in Africa. Migrant workers in South Africa, for example, paid an average of just over 23% in fees on the money they sent to Botswana, and this is in 2012, so 6 years ago, making it the most expensive remittance channel in the world. Sending money from South Africa to Mozambique was the second most costly channel, with an average 22% fee imposed on these transfers. The article quotes quotes a report from the World Bank, forcing migrant workers to pay as much as $50 to send $200 is wrong, especially when they're sending salaries they have earned in the hope of supporting their families back home. The World Bank said in the report, $200 often is a very significant sum for migrant family income, which is the case. The article addresses specific companies that control remittance payments and prices. Experts say the price of sending money is inflated by 2 companies, Western Union and MoneyGram, both of which we know are beginning to work with Ripple, which hold a duopoly over the global industry. This is per the article. Now, the author of the article did reach out to both MoneyGram and Western Union, so their opinion's a little bit different than with those high fees, that they're not the ones necessarily 100% solely responsible. MoneyGram states, according to the author, the funds that MoneyGram retains from the fee cover the cost of compliance, customer service operations, technology, and global funding and settlement, all of which are essential for the secure movement of funds on behalf of our customers. A Western Union spokesman said, per the author's quote, our pricing varies between countries depending on a number of factors, such as consumer protection costs, local remittance taxes, market distribution, regulatory structure, volume, currency volatility, and other market efficiencies. These factors can impact the fees and foreign exchange rates offered by corridor or in service type. Okay, so here's what we've learned so far. The old mechanism for remittance payments and cross-border payments has a detrimental impact on those in the developing world who use and rely on moving small sums of money, whether it's in Asia, Latin America, Mexico, the Middle East, or Africa. But we see that in Asia, Latin America, Mexico, and the Middle East, they all have banks that are beginning to work with Ripple and a new, more efficient, less costly solution. Africa is a tremendous use case that is being bogged down by government regulations, high taxes, high compliance costs, exclusive contracts, and with companies that are using costly, slow, old, outdated cross-border payment solutions. Remittance costs should be low, cross-border payments should be fast, and be completed with full transparency while providing real-time information on the status of the transaction. Ripple has taught us this. Banks around the world know that this is a needed solution, and many have already identified and joined RippleNet due to the low cost, near instant transaction time, real-time transaction data, and full transparency, among others. The Africa case study further proves the case that it is time to move away from the old ways with outdated technology, government interference, slow transaction times, high costs, potential for corruption or pay-to-play exclusive contracts with high government regulatory fees, high taxes, higher transaction costs, and no transparency. We know that remittance payments are very important to the families of those who are sending them. They rely on being able to send as much money to their families as possible while having them receive the money sent in the shortest time possible and without high costs taking a large percentage. When moving small sums of money, where the sender and receiver rely on every cent, even a small percentage of cost is a significant impact. One Ripple initiative is to be a resource for cross-border payments to those in developing countries where they have limited options with very high costs. In February, an article appeared on the IMF blog. The title was "Money Sent Home by Migrants Buffers Income Shocks." According to the article, is a brief quote. About 45% of these remittances flow from advanced economies to emerging market and developing economies. These funds have the potential to be an important mechanism for sharing income risks on a global scale. That is, if a family living in a developing country loses part of its income, higher remittances from relatives abroad could help compensate. And they go on. In many emerging market and developing countries, remittances from migrants abroad help households maintain spending when times are tough and incomes decline. In principle, integration into the global financial system could help smooth the effect of income shocks on household consumption through borrowing and lending in capital markets. Countries could borrow more when their income drops temporarily. So, developing nations are based heavily on agriculture and basic textile production. The economy can be very seasonal when crops are ready to sell. With agrarian-based economies, an impact on growth or production can be financially disastrous. Unlike in a developed nation where farmers can turn to government support or bank loans to overcome short-term issues, in a developing nation, the majority don't have direct access to these kinds of financial services. Many around the world are limited in their financial upward mobility, limited by the fact that they operate outside of the modern economy. These are the unbanked, a part of the developing nations population that have limited or no access to banks, credit card, mortgages, or loans, whether business or personal. A solution for providing financial services to the unbanked will have a direct impact on the socio-economic development of these countries. More having access to financial services should be the norm and not the exception. Now, I was reading CCN, and they had a brief quote from Bill Clinton at his presentation in Swell, and I just wanted to take one little quote that he said, and then I'm going to comment on that as well. It has to do with everything that we're talking about on today's video. So in this quote, Clinton suggested that the blockchain and cryptocurrency industry should not get ahead of itself. This is after he said that he thinks there's amazing things that the cryptocurrency and altcoin, blockchain in general, is going to offer. But then he went on here again. Clinton also suggested that the blockchain and cryptocurrency industry should not get ahead of itself, warning that moving too quickly could magnify the financial and social inequalities between people in developed and emerging markets. My comment on this is that I believe that Clinton made a mistake with his comment. I think it's actually inaccurate. It's really the current status quo which ignores and makes it more economically difficult for many in the developing markets. While it is cryptocurrency, and right now more specifically Ripple and XRP, that will shrink the inequality. The faster it can be implemented, the quicker there will be economic growth in these regions and financial gains for the people. So again, the status quo right now is magnifying the inequalities. It's not the cryptocurrencies, the altcoin, the blockchain. It's not going to be Ripple or XRP that's going to magnify the inequalities. Again, it's already there. It's already the status quo. Another article that I was reading on the IMF blog appeared in September. highlighting how access to financial services would impact many in Asian countries that currently do not have access. And I believe that this study, even though it is pertaining to Asia, could really translate throughout the world. Again, bringing financial services to the unbanked, making it more available. So 3 quotes from this blog or article that I thought were important. In Asia, the world's fastest growing region, expanding access to financial services for more people will mean higher growth as well as lower poverty and inequality. Implementing policies that promote widespread access to financial services, including by using fintech to spread the benefits more broadly and effectively, can help close these gaps in Asia. More access to financial services can help poor people climb out of poverty by making it possible for them to obtain credit and insurance to run a business, invest in education or health, manage risk, and weather financial shocks, all of which can generate income and improve the quality of their lives. And I believe that even these 3 quotes disprove what Clinton said in regards to the cryptocurrencies not moving too fast because it might magnify the inequalities. The inequalities already exist and they're already being magnified. And the faster we bring in financial opportunities, the smaller the gap will become. In order to provide direct access to these financial services to those in the developing world, the cost to participate would obviously have to be low. As it stands right now, it's simply too costly in most cases to even open a bank account for those without access to the financial services, to those that would be in this unbanked category. Blockchain and cryptocurrency is one way to open up a channel for financial services to those who are unbanked, to help them join the economy and become participants of the economy. The Ripple ecosystem is currently the best and really the only workable alternative solution that exists right now today. The stage is being set. Banks throughout Asia, Latin America, Mexico, and the Middle East are adopting RippleNet. Banks around the world will soon be freeing up their foreign exchange accounts, decreasing the risk by moving significant funds from these accounts that are currently sitting idle. These funds can then be put to a much better use. With RippleNet and XRapid, the cost of banking will decrease significantly. Cost of banking to the general population could drop to affordability, giving access to the many who currently do not have access. And being part of the banking system is really the first step for the unbanked in these developing nations to gain access to broader financial services. More access to banks, more access to credit, mortgages, business loans. And with broader financial access, more of the population will be able to increase the means of production, developing new businesses or expanding existing businesses, and will lead overall to an increase in the country's economic growth. With more of the world's population participating in their local and regional economies, there'll be an inevitable expansion of the country's economy. An expansion of an economy means more job growth and more new and existing business growth. As economies expand, there is more need for the import of products from other countries. This allows them to then participate in the global economy. Now, the pace at which the world economies can grow is in part dictated on individual access to financial services. We have now really completed a full circle as it brings us back to the important role that Ripple is playing on the global economic expansion. If you enjoyed today's video, please give a thumbs up, leave some comments, remember to subscribe, and just a brief disclaimer before we sign off. I'm not providing any kind of financial advice here. All the opinions expressed on this video and on my channel are my own opinions, but if I am going to give you any advice, then let it be this. Do your own research, invest only what you want to invest in, invest only what you're prepared to lose, and don't buy or sell based on the FUD or FOMO that is spread online. And with that, I look forward to seeing you on my next video, and keep on hodling your crypto.